I would like to introduce you to a good friend of mine, Sam Parker, who is the founder, owner, proprietor, co-founder, co-proprietor with his lovely wife of My Credit Guy. And they are a credit restoration company that specializes in working with lenders to help consumers get into a situation, either get the best interest rates or to qualify for a loan. And Sam is just a wealth of knowledge and just one of the most ethical and professional business people that I know. So Sam, thank you very much for joining me today.
Yeah, absolutely. Thanks so much for having me, Scott. How are you doing?
I'm good. So I've got an interesting topic to discuss with you because there's been a lot of changes around this lately, and there's definitely a lot of misinformation. Cosigners and cosigning on other people's credit. Back in the day, this used to be treated differently, right? Didn't you used to? Wasn't it it was a common practice many years ago to just get added as a cosigner on somebody's credit report to boost your credit score up.
Yep.
Does that still work?
It actually does. Authorized user is, I think, what you're referring to. And authorized user does still work. Now, there's been a lot of efforts by, honestly, not only the banking industry, but also the credit bureaus to say, authorized users aren't going to work the same anymore, or, we're going to change things or whatever. They do still work like that. You can still call somebody up, or you can still call a credit card company up and say, I want to add Joe Schmo to my credit card. His social security number is this, his date of birth is this. They'll read you off a little thing that says, hey, you understand that you had to have told this person that you're adding them and that it can hurt them or help them on their credit. They reported their credit. Is that all true? And if you attest to that, then they will still add it, and that person will still get all that pay history.
Now, why would you be how does that help you? How does it help you if you're an authorized user on somebody else's credit card?
So let's say that you didn't have any credit cards, or your scores were low, and I have a $15,000 card that's been opened up for the last 10 years and good utilization, everything on it, and I add you as an authorized user and your social and date of birth are attached. That thing's going to get inserted into your credit report like you've had a credit report for the last 10 years with a $15,000. There's no, even though it will say authorized user in terms of score benefit, there's not a differentiation. So you're now all of a sudden getting credit for a bunch of payments that you never made.
Wow. Okay. I had a scenario like this where the gentleman had canceled his last credit line. It was like 7 months ago, and they were working with another lender and they had some challenges. They sent me a credit report from like November of last year. When I pulled his credit, he had no credit score. He stopped using his credit, canceled everything, went dark for 7 to 9 months and had zero credit score. And what we ended up doing is adding him as an authorized user on one of his wife's credit cards. And within about 3 weeks, I had a 690 credit score. He only had one credit line, and then he had a bunch of old stuff on there. Now, is there any risk for me to go on as a authorized user on somebody else's account?
So yes, but not long term if you know the way that the system works. Meaning, if I add you on as, let's talk about that same card. I added you on. It was great. I made all my payments for the last 10 years. Now let's say I hit bad times next month. I max out the card and I stop making my payments on it. You now have late pays on your credit report. You now have a maxed out credit card, and that's going to drop your score significantly. Now, the one thing that you can kind of have in your back pocket is that legally at any time, you as the authorized user should be able to call up that card company and say, get me off of there. This is not my debt. I don't want it there. And that's why the powers that be have worked to remove the authorized user from the scoring algorithm in the past, because it really does kind of create an area where there can be some shady stuff going on, where you get the best of it, but then you have none of the consequences of it. But I kind of look at it like this: there's enough areas where the consumer gets absolutely hosed that it's not so bad that maybe there's one little thing still left that the consumer can lean on. But we as a company don't really push authorized users. We'll usually have the clients establish their own positive trade lines so that it's a long-term benefit. It's a long-term, behavior change. But because if you just, if you have a 590 credit score and you've earned it, by doing, bad things with your credit, and I bail you out by putting you on an authorized user, now you're qualifying maybe for a home or for money that you shouldn't have, because your behavior doesn't actually warrant, you getting that. So you are more likely to go derogatory on or to let that account go to a derogatory status. So in some cases, like the one with the wife and the husband, right? Well, they're already sharing those bills anyway. So the husband should get credit for the wife's, but there are companies out there that, there's even shady loan officers that will add their clients to their credit cards as authorized user. There's companies out there, and I get the emails every day, and I'm disgusted by them, but it'll literally be a list of credit cards and how much it would cost if I wanted to refer a client to add on to that credit card, and the commission that I would receive if I did it. I of course delete those, but a lot of credit repair companies don't, unfortunately. They actually refer their clients to pay $1,000 to be added on to, an Amex card that's been open for the last 6 years with a 30% balance limit ratio. So it has its own little, God,
that just
dark
seems
niche out there.
Yeah, that just seems really, man, that's kind of
fraudulent.
No, that's super fraudulent. And it's hairy. And how dare you say that there are sleazy loan officers out there? I've never heard of a loan officer or a mortgage company doing something sleazy. That's ridiculous. Okay.
Right. And coming from the credit repair guy,
at least not the 5% that I know. The 5% I know.
Exactly.
Cool. It's those other 90%,
exactly.
those rascals that you got to watch out for. So
I don't think it's super common out there, but it does happen, unfortunately.
I would say it's probably more common than you would think, because and here's the problem with this is consumers don't know that it's illegal. Their loan officer, and this is the challenge. This is the unique situation that I'm in on Find My Way Home, is I get to hear the horror stories after people have been misled and told one thing. They find me with a problem. And a lot of times they're being told these things. When you call a lender, especially if you see a TV commercial, you pick up the phone, you talk to somebody, there's an assumption that this person is a professional and that they're giving you a professional advice. That is not always the case. That just isn't always the case. And so that's difficult. So as a consumer, if your loan officer or if somebody is offering to add you as a authorized user, I would run like hell, because that is a very slippery slope to just being an unethical business. Right?
Yep.
Now we had talked in another video when we were talking about quick tips for maximizing credit scores. And one of the things that we talked about is one of the things to never do is to cancel a credit card. If you're an authorized user and then you remove yourself as an authorized user, is that going to have the same impact on your credit as if you canceled a credit card?
Yeah, it'll be like it'll be if you were getting a positive benefit from it, it'll be like that credit card never happened, and you will see your scores drop because of it. So, if I'm not standing up here on my pulpit saying, that how dare you do this? And as a consumer, I wouldn't rush out to remove yourself from authorized user if it's helping you. I just would not fall into the trap of paying to be added or necessarily being added if you don't have any part in paying that bill. But if it's on there and it's helping you, I also cannot, in my right mind, tell somebody to do something that's going to drop their scores. But what I would do is start to build up your own positive trade lines, where down the road, if anything goes wrong with that authorized user account, you can pop yourself off and your world isn't going to come to a crashing halt because your scores were propped up solely on that authorized user card.
And the reality is you shouldn't be an authorized user on somebody's card who doesn't want you to be an authorized user. Like you shouldn't be doing it to manipulate the system anyhow, because that stuff's just going to end up coming back and biting you. Now, if I have somebody like, say, my parents or something, and they do add me as an authorized user and to help me out, is there any way that could hurt them?
No, as long as they don't give you a card. Because, I mean, you are an authorized user now. So if they, like for instance, I added one of my business partners as an authorized user because, and this is in a different business, because property, we just own some properties together, and we make the joint payments to our contractors, on these cards, but it's all coming out of my bank account and everything. But, it's shared profits. So I wanted him to get credit for what we're doing at the same time. And no offense, buddy, if you're watching, I'm not going to let him have a credit card either, because if he went out and used it, racked it up or something like that, then I'm going to be responsible for that. Now, I'm still going to have the opportunity to make all those payments. So it's not like he's going to have the ability to make me miss a payment. But if you sign somebody on as an authorized user, they are an authorized user. They can use the card if you let it get in their hands. So like what I did, and again, sorry, buddy, but what I did was I put him on as an authorized user, and I had that card set to my address, and that card will be shredded as soon as it arrives, so that he's getting the benefit because our joint proceeds are going towards paying that credit card off. But at the same time, all purchases have to go through me. So, I wish it wasn't like that, but it is. And he's excellent at the parts of business that he does.
Okay. So that's authorized user. Let's talk a little bit about cosigners, because it's not unusual for somebody to cosign on a student loan or an auto loan, or even even a mortgage. That's pretty common as well. What do I need to know about being a cosigner on somebody's account?
Yeah, what you need to know is that you are 100% responsible for that debt. You are not just doing somebody a favor. And that's usually how it's posed to us, is that we get that brother or that friend that comes out of the woodwork that's like, blah, blah, blah. But really what they're saying is, I haven't put myself in a position to actually make this purchase, and now I want you to help me with it. Do me a favor. Come on. Don't you love me? That sort of thing, right? Mm-hmm. And so we do it thinking that we're just helping. And really what we're doing is we're putting ourselves 100% on the line to make that payment. And there's a couple different ways that people need to understand that this hurts you. So first of all, if you are a cosigner, okay, and you sign on, you are 100% liable, meaning if that brother that said that he would make all the payments doesn't make the payments, it's not, you can't call the bank and just say, well, I just co-signed, I was just helping them.
Yeah.
You signed on the dotted line as someone who agreed to make sure that they got their money every single month. So if you don't pay it, you will get late pays on your credit report. You will have charge-offs. You can get a repossession. You can get a foreclosure. You can get sued. You can get garnished. I mean, keep going. Whatever you think that you weren't setting yourself up for, you are. Not to mention that it was all well and good that you just helped your brother or your friend get qualified for something, but now comes time where your wife or your husband says, you know what, new kids on the way, family's getting bigger, whatever, let's get a house. So you go to buy your house, but remember 6 months ago you co-signed for somebody else's, and that is going to be factored into your not only credit score and the way it works, but to your debt to income ratio, and possibly now you don't qualify for your own loan because you helped somebody else get theirs. So not only is it putting you on the line and in harm's way in every sense of the matter, but you could be disqualifying yourself because now you've signed up for more debt and you can even afford, even if you were just co-signing.
So there have been recent changes to Fannie Mae conventional guidelines, and they are now looking at contingent liabilities differently than what they used
Oh,
to in
good.
the past. So what they are doing now is if you can produce 12 months worth of canceled checks from the responsible party, if it's not you, then you can eliminate that debt from your debt to income ratio, whether it's a mortgage or whether it's like a credit card or something like that. But what you said that's really, really important. First of all, it has to be a full 12 months. You have to be able to have documentation showing that you paid 100% of it. It can't be, well, they paid it cash this 1 month. That's not going to fly.
Right.
You're not going to be able to eliminate that debt. And you run the risk, like you said, as a cosigner, you are plan B. So if they miss a payment and you don't know that they miss a payment, you're not going to know until you get a phone call from the creditor saying that the payment wasn't made. Right? Because you're second on the list for people they're going to bother if the payment doesn't show up. So you're not necessarily going to know about that. And yeah, that's that, those are tough things to get around. Scenarios where I think a cosigner situation is good is if you're buying a house and let's say you only have a 12-month history on a second job. So you make plenty of money to qualify for the home, but we just can't use your income for the second job. And then you've got your parents or your brother or sister willing to help you out. You want to refinance that thing in 12 months. Once you can use that income, get them off the loan. So that they're no longer, at risk. Those are probably some of the things that you should look out for. But, also some of the lending guidelines have changed recently regarding student loans. A lot of parents will co-sign for student loans and the kids usually make the payments. But if it's in deferment, there's nothing you can do. Nobody's making payments. So you're getting hit with that thing. If you're a homeowner and a parent, Fannie Mae has changed their guidelines that you can now pay off those student loans and it's not considered a cash out refinance. So it's least expensive you can get, lowest interest rate you can get. You follow no cash out pricing guidelines. You still have kind of your loan to value restrictions for cash out. But other than that, co-signing isn't a bad thing, but it's something you don't want to just do it without having an exit strategy and without understanding all aspects of what it is you're committing to, because you're on the line.
Well, right. And most importantly, just consider the person that you're co-signing for. And you don't have to say this to their face. You could just say, I'm not going to do it. But I mean, if it's your brother-in-law that never holds down a job and wastes money constantly, and you see that, you just need to know it's more than doing somebody a favor, that you are truly on the hook for them. Now, if it's your responsible child or your best friend or something like that,
listen, if you're in
this is going to be fine.
Yeah, if you're in the back seat of a car and that car drives to a 7-Eleven, pulls out a couple of guns and holds them up, you're still responsible because you're in the back seat of that car.
Yeah.
Right. You were there at the scene of the crime. So it's a very, very valuable tool, but it also has a lot of nuances and it can impact you. So understanding that, I think, is really, really important. And as always, Sam, I appreciate your input on this and your feedback. Is there anything else you think we should know about being a cosigner or co-signing?
Yeah. Well, I guess it wouldn't be a true cosigner situation, but it's in the same family, is signing on with a spouse or a boyfriend, girlfriend even, and then breaking up or getting a divorce. The one thing that clients and consumers need to understand is that a divorce decree does not supersede a pre-existing contract, and the bank is not going to care at all about your relationship status on Facebook. If you guys both sign for a mortgage for a car, for anything, and the other person goes late, even if the divorce court says this person is responsible, but you haven't refinanced it out of your name, you will get late pays on your credit report, all the gamut of things that I list off before. So just remember, a divorce court does not supersede a pre-existing contract. If you sign on the line with somebody, especially in a joint situation, it does not matter what your relationship status is. You are absolutely 100% reliable. So that's kind of in the same family as a co-signing issue, but it's one that really bites people a lot of time. So if you're about to unfortunately get a divorce, before it all gets hairy, make sure that he or she who is responsible for the debt refinances it out of your name before or as soon as possible, so that you don't actually have that liability floating around out there anymore.
That's good. That's really, really important. And you know what I mean? Along those lines, don't be so eager to try to help out your boyfriend or girlfriend, because trust me, it's not your first boyfriend or girlfriend. It won't be your last one. And stuff happens, right? At least if you're married to the person, there's a little bit more kind of holding you in there. But it can be very helpful if you're using it right, if you understand it and you're making informed decisions. It's a powerful tool, but it's also a huge liability. And I think understanding it is the key to being successful if you need that strategy. So as always, Sam, you are awesome. I appreciate it. I appreciate your expertise, your professionalism. I appreciate you being here to share your knowledge with everybody. So thank you so much, and we'll see you next time.
Anytime. Thanks, Scott.
All right, you got it. Bye.